The title of our time together is All You Need to Know About VA Loans. My name's Jimmy Vercellino, mortgage loan originator specializing in VA loans. So we have a mission today, right? It's a military themed course. I get to kind of outline this as if I was back in the Corps teaching a class again, right? But nevertheless, today's mission is simply this. I want you, I always feel like Uncle Sam when I say that, by the way, but I want you to obtain an understanding of VA home loan financing. And in turn, I want to help veterans and active duty military purchase homes. So what I've learned about the VA home loan benefit is that military really doesn't teach this stuff. I remember when I was going through my transitional assistance program, and they make mention of this particular form called the COE. Marines are falling asleep. They can't even hardly think straight. They've been in this class all day, right? And they say, if you want to use this benefit, there's this form that you need. Well, that's really all that they kind of talk about when it comes to the VA home loan benefit. And what happens is the VA doesn't advertise this stuff. So how in the world can we expect veterans and active duty service members to understand it? And it's like they don't. And oftentimes they get misinformation. They get bum scoop when it comes to utilizing their VA home loan benefit. So we're going to set the record straight today. First things first, we're going to talk about the VA loan myths. There is a lot of, as I just mentioned, bum scoop, right? Kind of floating through the marketplace that ends up having veterans utilize other types of financing when it comes to VA loans. And I take issue with that because veterans and active duty service members need to get appropriate information when it comes to VA loans. So that way, once again, they can make informed buying decisions. So VA loan myths, there's a lot of them out there. We're going to unpack that today. How the VA loan works. That's an interesting question. How does the VA loan work? Is it really a VA loan? Does the VA lend the money? We're going to talk about that. And of course, a VA loan overview. There's really a lot of information that you as the veteran need to understand when you're getting ready to embark upon this home buying journey. So that way you've, how should I say, armed yourself with the facts, right, with this information and you can properly use it. Eligibility requirements. This is a big one, okay? Hear me out on this. In order to be eligible for a VA loan, right, you have to have served a specific amount of time. Now, you can be eligible but not pre-qualified. And you can be pre-qualified but not eligible. So we're going to discuss those things today as well. And lastly, documentation needed. What are the documents that I'm going to need in order to take advantage of this benefit? By the end of this video, you should have a list of all of the documents that you need to collect, right? Have assembled, put together, so that way when you're working with a mortgage loan originator, somebody like myself, you can hand them to them. You could be AJ squared away and you can impress them. You'll say, well, they'll say to you, how did you know all of this information? You say, well, I've been watching Jimmy Vercellino's videos and I subscribe to his channel, daggone it, right? All right, good to go. So let's keep moving forward. Continued steps in the process. How does the VA home buying process look? What are the steps involved? This will help you to kind of see things coming, shed light or shine light on the topic of VA home ownership so that way you can be prepared. Active duty military. There's a lot of active duty service members that watch this channel that really have no idea how it works. So we need to make sure that they're armed and dangerous, ready to go out there and put rounds down range. VA funding fee. Believe it or not, there is a cost imposed on the mortgage by the Department of Veterans Affairs that they are going to essentially charge us as veterans to use the VA loan. Now, there are some exceptions to this. There are ways to lower it, and there are ways to even be exempt, and that's exactly what we're going to discuss today. How about this one? VA income and credit qualifying. Right? What are the credit scores that I need in order to take advantage of a VA loan? Does VA even have a credit score? In addition to that, right? The income, how much money do I need to make in order to take advantage of a VA loan? These are all good questions that I think veterans and active duty service members don't have the answer to. How about this one? The VA allowable and non-allowable costs. What are the costs that you as a veteran can or can't pay, or even how much does it cost to buy a home with a VA loan? We're going to talk about that today. VA appraisal property requirements. This is kind of one of the most misunderstood things about VA home loans and appraisals. We think that the VA appraiser is an employee of the VA. They go out there and inspect the property. It's just not true. All right. So we're going to kind of unpack all of that. And really, again, I believe this in my heart, excuse me, that by the end of this video, you're going to be equipped and ready to get out there and start your home buying journey when the time is right for you. Good to go. All right, so let's keep moving forward here. The first thing that I want to do is talk about the myths. So the VA myths, there are a lot of myths in conjunction with the VA loan. The myths exist from two parts. Number one, from real estate agents that think that, the VA loan is more difficult to use. And there's even myths that you as the veteran have been told about your VA home loan benefit that aren't true. So let's dispel some of these myths. Number one, that the VA loan takes too long to close. Let me let you in on a little secret. Can you guys hear me okay? The VA does not lend the money. All right. Kidding aside, it's true. The VA doesn't lend the money. All they do is guarantee the loan. We'll talk about that in just a moment. So if a lender or a real estate agent is telling you that a VA takes too long to close, then that could be an indicator that you may be working with the wrong mortgage lender, because different lenders have different time frames and turn time requirements. So I share all of that with you to say that VA loans can be closed in less than 30 days, heck, less than 21 days. It just depends on your individual scenario and the mortgage lender that you're working with. So don't let anybody tell you that VA loans take longer to close. It's the mortgage lender perhaps that's taking longer to close. So you just want to be prepared for that. All right. I've heard this before, that if a VA, if a VA or a veteran buyer is putting an offer in on a property, that the seller has to pay all of their fees. Let me let you in on, once again, a little secret. There are no mandatory fees that the seller has to pay on a VA loan, right? It's just not true. Not even the termite report, right? Not even the escrow fee. The veteran can write a full price offer on a VA loan and pay for all of the costs in conjunction with the VA loan. That's important for us as veterans and active duty service members and real estate agents to also understand that your seller is not going to be adversely affected or impacted by way of a veteran's VA loan offer. All right. Don't let people get away with that stuff, because it adversely affects or impacts veterans and active duty service members by getting their offers accepted. Or how about this one? The underwriting is too strict. I've heard this before in my time in the industry. Jimmy, you don't want to use a VA loan because that VA underwriter is going to tear apart your appraisal, or your VA underwriter is going to make it more difficult for you to qualify, etc. Man, this is just nonsense. The VA has some of the most common sense, liberal underwriting guidelines that exist on the marketplace that streamlines the process for veterans and active duty military to get approved. Things like residual income, relaxed debt to income ratio requirements. We're going to talk about all of that today too, by the way. And then of course this one, the VA appraisal is a pain, dun, 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 right? And so here's the deal about the VA appraisal. There's a lot of misinformation out there, but I think if you watch one of my videos where I actually interview a VA appraiser, right? This is important. He says to me, his name's Jay Josephs. He's the owner of Joseph's Appraisal Group. You can watch that video on this channel. And Jay says, you know what, Jimmy? Under no circumstance will I ever appraise a property for less because the borrower is getting a VA loan. In other words, Jay doesn't give a rip what type of financing it is. What Jay cares about, right, is what the recent solds are. So that's my next point, that a VA appraiser is not necessarily an employee of the VA. It's an independent appraiser that's contracted to go out and inspect and appraise the property. Good to go? So I think that there's this notion that VA appraisers are somehow more strict, et cetera. It's just not true. In my experience, the overwhelming majority of VA appraisals that we receive, A, come in on time, and B, come in at value. And there's also some additional safeguards that VA puts into place in the event that it's not going to come in at value. You as the veteran will be notified by receiving something called a Tidewater notice. The Tidewater notice basically means that you have 48 hours to provide additional comparables that support the value of the property. Good to go? So let's keep rolling. Oh my gosh, I almost forgot. VA loans are subprime loans, right? I can't move away from that one without briefly addressing it, right? I'm a big fan of Dave Ramsey. I love Dave Ramsey. He's taught me a lot, right? But that doesn't mean that I have to agree with Dave Ramsey on everything, and in particular, his position when it comes to VA loans. There's a video circulating around out there where Dave talks about, VA loans have higher fees and interest rates, et cetera. It's like, Dave, who told you that, right? Because it couldn't be any further from the truth. VA loans have lower interest rates. Number one, in my experience, we've seen VA loans be anywhere from 3/8 to all the way from a full percentage point lower than conventional loans. And in addition to that, they have no private mortgage insurance. Good to go. So in many cases, VA loans save veterans money both in the form of monthly payment and fees. Now, one of the things that Dave would say is he doesn't want veterans to purchase a home broke, right? And that's kind of his position, automatically assumes that if a veteran's buying a home with no money down, that they're broke. Well, that may or may not be true. And I don't want veterans to purchase homes broke either. But just because a veteran is not putting any money down doesn't mean that they don't have liquidity, right? In the event that we call this the joys of home ownership take place, right? They can make those repairs. So yes, we would agree on that. We want veterans to be liquid enough to be able to make the repairs on that property. But I guess here's what I'm trying to say. Nobody would give you a hard time for shopping at Costco because it saves you money, right? They'd look at you and say, yeah, you know what? My guy here or my gal here is a baller on a budget, right? Well, it's the same thing with the VA loan. The VA loan saves veterans money, and we should not be kind of looked at in a way that is less than optimal because we're utilizing this VA loan. It's designed to save veterans and active duty service members money. Sorry, guys, I get a little bit fired up when it comes to this kind of stuff. Can you tell? Now, if that's not enough, right, there's VA myths that exist within the veteran community. Veterans think that they can only use their VA loan one time. Not true, right? Veteran can use their VA loan as many times as they would like. Heck, they can even have more than one at a time. Good to go? Or that the VA loan expires. Guess what? Your VA loan never expires, never goes away. And as I stated earlier, you can even have more than one at a time. Use it as many times as you would like. I've also heard that veterans can't use a VA loan if they've had a bankruptcy or foreclosure on a VA loan. That's not true either. Veterans still may have enough remaining entitlement to be able to use this benefit moving forward into the future. That's not true. All right. So as I talked about, one loan at a time, or having more than one VA loan at a time, or VA loans are for subprime borrowers. These things, again, are just not true. All right. So how do VA loans work? That's a good question. I think that there's a lot of vets and active duty service members out there that think that it's an automatic approval from the VA or that the VA lends the money. Both of these things are actually incorrect. So here's how VA loans work. The VA does not lend the money. Did you know that? Right? So all the VA does, you guys, is just guarantee the loan by a particular percentage. And that essentially helps to, how should I say, create a equity position in the home for the lender. So here's an example of how it works. So let's say that a veteran is purchasing a home and borrowing up to $766,550. VA will guarantee 25% of that amount, or up to 25% of that amount. So in this particular instance, $191,637.50 on a $766,550 loan amount is what the VA will guarantee in the event of default. Now think about it. If you are a lender and somebody comes to you and says, hey, you know that loan that you just made to Joe Smith? You say yes. They say, well, you know what? In the event that Joe defaults on you, I'll cover 25%. Now all of a sudden that investment's looking a little bit better, is it not? Well, it's the same thing with a VA loan. Lenders like making VA loans because they have that 25% guarantee from the Department of Veterans Affairs. That's why VA loans are desirable for mortgage lenders. Now, here's the deal, right? You as the veteran are not getting a VA loan from the Department of Veterans Affairs. That's why when we say VA loans, it's not actually a VA loan. It's a VA guaranteed loan. You guys following me along on that? So what does that mean? It means that you're going directly to the mortgage lender. They're the ones that are making you the loan, and VA stays behind the scenes and they just guarantee the loan, again, behind the scenes, really have limited to no involvement on the transaction whatsoever. So what does that mean for you as the veteran? It means that you can get a VA loan up to any purchase price you would like with no money down. VA loans are the only 100% financing loan that's available on the marketplace today that allows a veteran or active duty service member to purchase a home up to any purchase price they'd like with no money down. You guys follow me along on that? Now, keep in mind, you still have to qualify by way of income and credit. And you have to meet or adhere to the lender, the one who's making you the loan, to their specific guidelines. good to go. So I share that with you because oftentimes veterans think that it's an automatic approval. It's not. We need to make sure that we're getting qualified by way of income and credit for the loan amount in which you're seeking. Roger that. Now, couple of things, housekeeping rules. If you guys have any questions during this period of instruction, just drop a comment down in the comment section below and I'll make sure to personally answer it for you. And like I said earlier, if and only if you feel like I'm earning it, right? Consider showing your love, liking the video. It helps to promote this video and share it with more veterans and active duty military so that way we can get them educated. All right. So let's keep moving forward. VA jumbo loans. Jimmy, how do you mean exactly? Well, here's the deal. In 2020, the Trump administration signed into law a particular bill called the Vietnam Veteran Blue Water Initiative Act. And inside of this bill, there was essentially a kind of, how would you say, a piece of legislation that essentially rolled or did away with the VA maximum loan amount. So it used to be in specific counties across the nation, there was a maximum loan amount. And if you ever went above that, you'd have to come up with 25% of the difference if you wanted to borrow more. Well, inside of this bill that was designed to give Vietnam veterans, healthcare aid, they, again, lifted the cap on VA loans. So what this means now is that a veteran can purchase a home in any geographical location they'd like with no money down, right? And no private mortgage insurance. Now, keeping in mind, you probably know what I'm going to say next, right? You've got to qualify by way of income and credit, but this is a massive value add. So if you're a veteran and you want to borrow more than that 766, 550 conforming loan limit, which changes annually, by the way, you can do that. You can go up even greater than that. Roger that. So if you're a veteran doctor, lawyer, business professional, know that this benefit is at your fingertips. You don't necessarily have to use a a non-VA jumbo loan. All right. Now, this is kind of funny, you guys, because this is one of the first videos that I ever published on YouTube. It was, I think, back in 2013, 2014, so 11 years ago or so. And I was talking about having more than one VA loan at a time. You would be surprised how many mortgage lenders are out there that still tell veterans they can only have one VA loan at a time. It's like, who told you that? Because the reality is that it's just not true. You can have multiple VA loans at a time, and that's exactly what I want to discuss with you right now. Here's the deal, okay? As long as you live in the property as your primary residence for 1 year, you can convert that home into an investment property and go out and buy a new home in a more desirable location, bigger square footage, house with a pool, whatever the case may be, right? You can do just that. So think about it like this. Here's the scenario that I like to give. It was my daughter's birthday yesterday, right? I gave my daughter some money to go shopping at the mall. So let's say that I gave her $100, right? She spends $50 at store A, right? How much does she have to spend at store B? If you're doing the math with me, you probably said 50 bucks, right? Well, it's kind of like the same thing with a VA loan. Every veteran has approximately 766, 550 worth of a VA loan to use, right? If you use 300,000 on the first house, if you're doing the math with me, right, that would mean that you've got 466, 550 to use on the second house. Now, here's the thing that's cool about this, you guys. If you put a renter in your existing home, VA allows us to use that rental income that you're going to be receiving from that lease to offset up to 75% of that mortgage payment. So you don't even have to qualify with both mortgages because, again, you're using the rental income up to 75% of it to offset your mortgage. So this is an amazing opportunity for you as a veteran to be able to build and create wealth utilizing your VA home loan benefit with this stuff. And I want veterans to know and understand that it can be done. If you have questions about it, drop it in the comment box, right? And I can kind of unpack it with you, or you can schedule a time to speak with me in greater detail if you'd like, okay? So let's talk about how the VA loan is put together, so to speak. Meaning this, the VA loan, you probably remember me telling you this already, right, is 100% financing. Doesn't require any money down. Now, does that mean that you as the veteran or active duty service member can't put money down? It's like, no, you can absolutely put money down, all right? And if you are in a position to do so, that may be worth something considering. Now, The VA loan is not a one size fits all. Jimmy, how do you mean exactly? Well, what I mean is that you can structure it as a 30-year fixed rate mortgage, 25-year, 20, 15-year. It's just entirely up to you as to kind of what fits by way of your monthly payment and budget. Good to go? Now, single family residence, condo, or a mobile home, you can use a VA loan for different property types. I'll throw in townhome, right? You can use it up to a 2-unit, 3-unit, or even 4-unit property. So there's all types of neat things that you as the veteran or active duty service member can use for a VA loan. So it's not just a one last time, one size fits all. You can use it however you would like. Now, here's the other thing that's cool about a VA loan. It doesn't have, look at my friend here, he's motivated, right? But it doesn't have any private mortgage insurance. Every once in a while, I have veterans that contact me on this channel and they're telling, or they're being told that their mortgage lender is recommending an FHA loan over a VA. That is one thing that really upsets me because at the end of the day, if you take out an FHA loan over a VA and you're qualified to use a VA, that's essentially burning money every month. I'm not kidding when I say that. You're literally burning money every month by taking out an FHA loan. In other words, you're paying unnecessary, private mortgage insurance on a monthly basis. Well, with VA loans, you don't have PMI, right? So the VA loan is going to be much more cost effective by way of monthly payment because VA loans, one last time, don't have any private mortgage insurance. So these are all reasons to consider utilizing your VA loan benefit. Now, every once in a while, I'll get veterans that reach out to me, Jimmy, can I buy my house with a VA loan and not live in it? It's like, no, you've got to live in the property. It's got to be your primary residence, right? You've got to live in it for 1 year before you convert it into an investment property and go out and purchase another home, more desirable location, better geographical location, whatever the case may be. All right. Now, the veteran must actually live in the home within 60 days of closing. Now, a veteran's spouse can occupy the property in the event that the veteran or active duty service member is deployed. The veteran's spouse can fulfill the occupancy requirement. Good to go. But the veteran still has to live in that property as their primary residence. And as I told you guys at the very beginning, a veteran can use his or her VA loan as many times as they would like, as long as they have sufficient entitlement. Jimmy, what's entitlement? It's basically VA guarantee, right? It's a specific amount of VA guarantee that you receive from the Department of Veterans Affairs to be able to have a full 25% guarantee on the loan in which you're borrowing. All right. So why else are VA loans desirable? Because they don't have any prepayment penalties. You want to buy your home, sell it in a year, right? You're never going to be stuck in that home and have to pay for any type of financial penalty for doing so. Back in 2005, 6, 7, and 8, this was a really big deal because homeowners were essentially trapped in their homes because they were going to pay this astronomical fee to be able to get out of it. Well, with VA loans, you don't have that and don't ever have to worry about it. Now, here's something that a lot of veterans and active duty service members ask me about, and it's eligibility requirements. There's a lot of misinformation out there, a lot of unknowns when it comes to VA loans. Jimmy, you might be asking, why do you have a chicken on there, right? Because it reminds me of a story. When I was in Okinawa, Japan, I had a first sergeant. His name is First Sergeant Ramirez. He used to say to me, gents, or before our Liberty briefings, right? He'd go, gents, don't go out there tonight, screw up and get yourself a big chicken dinner. For my Marines that are watching, you probably know that that's a bad conduct discharge. You get one of those, it's like, yeah, you're probably not going to be able to get a VA loan. So no big chicken dinners. In order to get a VA loan or to be eligible for a VA loan, you must be honorably discharged. Roger that. So there's some exceptions to this rule. General under honorable conditions, you may be able to get a VA loan, but I always recommend that my veterans reach out to the Department of Veterans Affairs first and get that COE on file before you go out and start looking for homes. All right. Now, there are some additional exceptions to that rule, like a medical discharge. Let's say that you were wounded in combat or perhaps injured on duty, something along those lines. You were medically discharged. You're now receiving VA service-connected disability compensation. You'll be able to get your VA home loan as well, most likely. Now, active duty service members. Jimmy, how long do I have to be, right, on active duty to use my VA loan? Okay, 90 days. 90 days, that's it, right? So The reality is, in my experience, most active duty service members aren't going to be in a position to buy a home in 90 days. Generally speaking, it's probably 1 year before things settle down. You know, they finish up their MOS school, they get to the fleet, et cetera, before they're ready to buy. But again, to kind of cite the requirement per VA guidelines, it's only 90 days. Now, if we go down to Gulf War, you guys can read this here as far as the actual veterans that have been honorably discharged for the different era of service, but the ones that I'm going to focus on here is the Gulf War, all right? So what you can see is it mentions 24 continuous months or full period, minimum of 181 days on active duty, all right? So you need to have served 24 continuous months or the full period, minimum of 181 days, and again, honorably discharged. You could be general under honorable conditions or medically discharged as well. But this, if you're a veteran, is how you're going to rate a VA loan. Now, there are some requirements to reserves or Guard. Generally speaking, for reservists to include National Guard, you need to have served 6 years before you'll rate a VA loan. However, right? If you've done 90 days of active duty service, you too will be eligible for a VA loan. Good to go? So it's important that you get a copy of your certificate of eligibility up front. We're going to talk about that more in just a moment, but I think that this information will help you to kind of have an understanding as to whether or not you'll be eligible moving forward. Now, I also get a lot of spouses of deceased veterans that would like to know whether or not they can use their late spouse's VA home loan benefit. The answer is yes, you can if, you receive DIC pay, dependent indemnity compensation, and the cause of death for the veteran or active duty service member was directly related to the VA service-connected disability. So I've seen circumstances or situations in the past where veterans were exposed to Agent Orange in Vietnam. They contracted cancer as a result of that exposure. And what ends up happening is unfortunately, they lose their life from the cancer. Well, you can tie the cause of death related to the Agent Orange exposure. And in that particular instance, the spouse, the unmarried surviving spouse, would be able to use the late veteran's VA loan moving forward. Good to go? All right. So what are the items needed for the VA loan? Okay. So the full disclosure here is this list can vary depending upon, your specific scenario. Mortgage lender may request different documentation. They may request some of it or even all of it. But a good general starting point is the following. You're always going to need, think of the rule of twos, 2 years of W-2s, 2 years of tax returns, 2 months of bank statements, all pages, even if the page is blank, and then last 2 pay stubs covering a 30-day period. If you receive 1099s, right, you'll need 2 years of 1099s as well. If you're a service-connected veteran, you'll be required to provide a copy of your VA service-connected disability award letter. That's a good idea to have that particular form kind of at your disposal. So that way, when your mortgage lender requests it or asks for it, you'll have that on file as well. Of course, a DD-214. Some mortgage lenders might say that this isn't necessary. I suggest that you have it on file and send it to your mortgage lender in the event that they need it. Better to have it, not need it, than need it and not have it, right? So, and then lastly, this VA, what we as the mortgage lender are looking for on box 24, this is a DD-214. You can kind of take a look at it here with me. But on box 24, we're wanting to ensure that you've been honorably discharged, right? So now that we've got your DD-214, we're going to request a copy of your COE, the Certificate of Eligibility. Now, this form confuses a lot of veterans. Why is that? Because they look at this form, it says this veteran's basic entitlement is $36,000. They call me and they say, Jimmy, I can't finance anything for $36,000. Now, everybody just relax here for just a second, okay? What that's referring to is something called basic entitlement. Well, if you think about it, I'm going to pull out my calculator here with you guys for just a second, right? If I take that number, that 36,000 represents 25% of 144,000. So what that means is that a veteran can finance a home up to 144,000, right? And essentially VA would guarantee 25% of that amount. Now you still might be looking at me going, Jimmy, dude, that's actually not very much either. It's still not going to get me what I need in my specific location, to which I would say, I understand, right? So the VA developed or implemented something called VA bonus entitlement. All right. And so bonus entitlement allows you to go even higher. Why did they create bonus entitlement? It's pretty simple, because real estate, historically speaking, right, over time has only done one thing, and that's go up, right? Whoops, go up, right? So as a result, VA developed or implemented something called bonus entitlement. So see if you can follow me along on this here. So if you take into consideration, right, that 36,000 only takes me to 144,000, let's do the following, right? Let's take that 36,000 and let's add an additional $155,637.50. I know that's a mouthful, but add that in the form of bonus entitlement. So watch what happens now. If I take that 155,637.50 of bonus entitlement and I add 36,000 to that, that ends up being $191,637.50 worth of guarantee or entitlement to the veteran. Now, if I take that number and I multiply it by 4, right, you come up with $766,550, right, for a VA loan amount. And that becomes the conforming loan limit for a VA loan. Now, if you've been following me along thus far, right, you probably remember me saying that there is no maximum loan amount on a VA loan. And here's what I'm trying to get at. You can go up to or above $766,550 on a VA loan, assuming you qualify by way of income and credit. And VA will guarantee that number by 25%. But if you have an existing VA loan, you're capped at that $766,550 number. And if you finance above that amount, you have to put 25% down from the purchase price and the loan amount. You follow me along on that? If you have more questions, just drop a comment down below. But that explains the certificate of eligibility. All it's telling me as the veteran is that you're eligible for the VA home loan, nothing more, nothing less. You still have to get pre-qualified and how much of a VA loan guarantee you have left over to use. Now, to get a certificate of eligibility, there's a few different ways. You can get it or request it from va.gov. You can go to your e-benefits portal, right? Download or retrieve a copy of it there, or you can reach out to a mortgage loan originator, somebody like myself, and they can provide a copy of that as well. All right. Now for the DD-214, slightly different. You've got to go to archives.gov. From archives.gov, you've got to request that online. It can take anywhere from 4 to 6 weeks to get that form. So you'll just need to be prepared and ready to go in advance of getting under contract on a house. That's obviously important because what you don't want to happen is get under contract on a house. You need a copy of your DD-214 and all of a sudden the mortgage lender's asking you for it. And it's like, I don't have it. It's like, well, we need it, right? Well, what do I do now, Jimmy? Well, you've got to get it, right? So make sure that you have a copy of your DD-214 as well as your certificate of eligibility. You have to have both of these forms up front. All right. So steps in the process. A lot of veterans and active duty military are kind of confused when it's like, where do I start? When should I start? Who should I start with? Well, the first step that I want you to kind of consider doing is number one, educating yourself, even though I didn't put that on here. And that's why you're here today, by the way. Appreciate you being here, educating yourself. And when you're ready, speak to a mortgage loan originator. Can I preface something really quick, you guys? Can I preface it by saying, speak to a mortgage loan originator that specializes in VA loans? I say that because the VA loan is nuanced, right? You don't want some kid in a call center type environment who can't even do 5 push-ups, right? Taking your loan application and doesn't know anything about the VA home loan benefit. It's like, work with somebody who understands VA loans throughout the entire process. So that way you can make sure that you arrive at your final destination on time, right? Ahead of schedule with no turbulence, right? That's what we don't want. So speak to a mortgage loan originator. Never too early to have a conversation with a mortgage loan originator, right? To get your questions answered. Now, having said that, the first thing that you want to do after speaking to a mortgage loan originator is get pre-qualified, right? And so that list that I shared with you a little bit earlier, you'll collect those documentation, you'll submit an application with the mortgage loan originator on their website. Now, when should you do that? That's another good question. My general recommendation for veterans and active duty military is that you provide it to them, or you submit an application to the lender within 90 days that you're wanting to be in your home. I say that because your credit report's good for about 90 days. You want to try and ideally get your credit pulled one time and one time only. All right. And so by doing that, you can time your closing according to your credit report date, right? And you can kind of, takes time to put together all of the documentation. It takes time to go out and look at homes, right? So you can kind of, again, time that closing within 90 days. So shoot for 90 days. So now is the fun part, right? After you've been pre-qualified, the mortgage lender is obviously going to lock on a monthly payment for you, a maximum loan amount. They've reviewed all of your documentation. They've checked your credit. I guess the big thing that I would just kind of park on this for a second and say, make sure that the monthly payment fits by way of principal and interest, right? Taxes and insurance, and also cash to close, right? So keep in mind that the VA loan has costs associated with it. When I say costs, there's cost involved with purchasing a home, taxes, insurance. We'll talk a little bit more about that later, right? But the VA loan has costs. So you want to ensure that the monthly payment for which you're getting ready to finance fits, because after all, you're the only one that's going to be making this monthly payment, right? Not the lender. They might pre-qualify you for more, but it's like, gee, thanks. Are you going to make it for me every month? It's like, no, I'm not. Right? So you want to make sure that that monthly payment fits and the cash to close, and that you understand the process. So now is the fun part. You're getting ready to go out there. You've got a copy of your certified pre-qualification letter with a monthly payment that fits, cash to close that fits. Now you start shopping for a home. You want to identify a home that fits in your particular price point, right? You want to find that home and then submit an offer on a property in conjunction with your real estate professional, right? So the real estate agent's going to draft up the offer. They're going to submit it to the seller. So let's say that they look at it, right? You've got the offer, you've drafted it. I look at it as the seller and go, okay, yeah, this looks like a pretty good offer, right? They've been pre-qualified by Jimmy Vercellino and they're good to go, right? And so at that point, I accept the offer. Now you're under contract. Right? And generally speaking, if you remember from the first part of the video, I talked about being under contract for roughly, 30 days or so. It can be done sooner, can be done a little bit longer than that, right? But generally speaking, you want to budget for about 30 days. So once you're under contract, now is when your loan goes into processing and underwriting, right? Processing is essentially reviewing your income, right? Collecting the necessary information like written verifications of employment, banking information, et cetera, right? Once we take that information, we're going to submit it to an underwriter who's going to sign off on everything. Now, during that process as well, we also want to order a VA appraisal. Assuming your property comes back, appraises at value, the underwriter looks at everything, signs off on everything. Now they've issued your conditional loan approval. Congratulations, your loan is approved. Amen. Hallelujah, right? So now that your loan's approved, there may be some additional documentation needed, right? So in order to request a clear to close, the mortgage lender may come back to you and say, hey, Jimmy, I need X, Y, and Z. It's like, okay, got it. Provide X, Y, and Z. Now they sign off on your closing, and now they've issued the clear to close. That's where your final loan documents are drafted and sent to the title company or escrow office or attorney, depending upon who you're working with, right? And so when that happens, you sign your final loan documents, and now you've become a homeowner. It's time to build and create wealth moving forward, all right? So active duty military, I want to briefly share some kind of thoughts from my active duty military that watch this channel, because, there's a lot of mortgage lenders that work on VA loans, and they shouldn't. Why do I say that? Because this kind of appears throughout the pre-qualification process when they incorrectly pre-qualify a veteran. If their ETS date is less than a year, it's like you need to be able to document what you're doing when you're getting out of the military. So oftentimes mortgage lenders don't know or understand what an ETS date is. And it's important that if you have less than 1 year as an active duty service member, that you are able to show either A, that you're re-enlisting, or B, that you've got a job lined up in the civilian sector. Good to go. And then also your BAH, basic allowance for housing. If you're PCSing from one duty station to another, the mortgage loan originator needs to know and understand that they can't use the BAH from the place that you're departing from. They've got to use it for the place that you're going to, right? So make sure that you're working with a mortgage loan originator if you're an active duty service member who understands, right? The VA LES, or I should say the leave and earnings statement with a VA loan. So the VA funding fee, let's talk a little bit about that briefly. What is a VA funding fee? A VA funding fee is a cost imposed on the mortgage by the Department of Veterans Affairs to cover the risk associated with the loan. So if you think about it, right, the VA guarantees millions of loans, right? If there's a bunch of defaults that take place, right, they've got to send out a lot of money, right? That's problematic, right? So what do they have to do? They have to charge us veterans to use a VA loan. So here's how it works. If a veteran is using their VA loan for the first time, the VA funding fee is a 2.15%, right? Now, if they're using their VA loan for a subsequent usage, basically times 2 through infinity, right? It ends up becoming 3.3%. So the VA is going to charge veterans more money to use their VA loan if they're using it for the second, third, or fourth, or 10th time. Now, there are some ways to save on a VA loan and a VA funding fee. If you put down as little as 5%, the VA funding fee goes all the way down to 1.5%. Put down 10%, goes down to 1.25%. So in my experience, you know, if you're a veteran that's using a VA loan as a subsequent usage, it really pays to be able to put money down because you're going to save quite a bit of money on the VA funding fee. Now, here is something that I want all of my service-connected veterans to know. If you are as little as 10% service-connected, your VA funding fee, you ready for this, is waived. Waived for life, right? That is a beautiful thing. So you are literally going to save tens of thousands of dollars in unnecessary fees and expenses on your VA loan. If you're an active duty service member, Purple Heart recipient, you too will also be able to have your VA funding fee waived. Important information to know. Now, VA income and qualifying. This is important because I think a lot of veterans and active duty military don't know and understand it, right? But it's kind of different from most loans. And what I mean by that is simply this. Qualifying is based off of something called residual income. VA has more relaxed guidelines when it comes to debt to income ratio. So for example, on a conventional loan, it's 49.9%. VA allows veterans to go above that so long as they meet the residual income requirements. So I'll use myself as an example. I am a family of 4, right? I'm married with 2 children, right? If my debt to income ratio is above a 41%, I have to have at least $1,340 left over at the end of the month. So think about it like this, right? My gross income minus the mortgage payment, minus taxes, minus any other liabilities, minus the monthly maintenance and utilities on the properties. I'm left over with that net number. As long as that net number meets $1,340, I am qualified by way of income and residual income to use my VA loan. I have more videos on residual income that you're welcome to check out. Here's a little gotcha that a lot of mortgage lenders don't know about. If you have childcare expenses, VA is the only one that takes into consideration childcare expenses. So make sure that you are accounting for childcare expenses if you're using a VA loan. Let's talk about VA loans and credit, all right? A lot of people don't know this, but VA loans and credit, well, there are no credit score requirements set forth by the VA, right? Well, remember I told you this at the beginning. VA doesn't have any credit score requirements, but the lender, the one who's lending you the money, does, right? So lender requirements vary. You can speak to 3 different lenders. 3 different lenders have a minimum credit score requirement. So it's important to understand, right, that just because VA doesn't have any credit score requirements, you still have to make sure that you're adhering to the credit score requirement of the lender who's lending you the money. Now, VA loan, generally speaking, looking for a clean 1-year payment history. All right, so making sure that your payments and liabilities have been paid in a timely manner for at least 1 year. If you've had a bankruptcy or foreclosure, okay, it's a 2-year waiting period according to VA guidelines. Pretty lenient underwriting guidelines for VA because if you compare that foreclosure on a conventional loan, it's 7 years. Compare it to a FHA loan foreclosure, it's 3 years. All right, so pretty lenient when it comes to these types of things. Now, if I'm married, which I am, and I'm purchasing a home in a community property state, okay, what has to happen is that my spouse's credit report needs to be included in the file, and I must ensure that I'm qualifying with her debts, right? So if you're in a community property state, it's important to know and understand that. I can make a list available for community property states in the comment section below, all right? So keep that in mind moving forward. Now, how much does it cost to use a VA loan? That's a good question, right? So I should say, how much does it cost to buy a house? That's probably a better way of asking it. And the answer is, it depends. But generally speaking, I estimate that my veterans prepare for roughly 2.5 to 3.5% of the loan amount. Now, this may vary depending upon some of the things that you can see here in this slide, right? The lender-related charges, how much money the veteran is being charged to buy down their interest rate, flood cert, credit report, appraisal. You guys can read here, prepaid taxes, interest, insurance. But a good general rule of thumb, one last time, is 2.5 to 3.5% of the purchase price. Now, can you ask the seller to cover some of those costs? It's like, yes, go for it. I see many veterans negotiating with sellers in today's market. So you may want to consider doing that moving forward. See if you can't get that cash to close figure all the way down to 0 or perhaps even lower. All right. Now, VA appraisals. All right. So this is important to understand moving forward. Okay. This is a big kind of, how would you say, this is shrouded in mystery with a VA loan, and that is the appraisal piece. So I told you this earlier. It's an independent appraiser. It's not an employee of the VA, right? It's randomly assigned through a lottery process. And the VA contracted appraiser is going to go out to that property to ensure that the property is safe, structurally sound, and sanitary. It's got to check those 3 boxes. So if there's any safety hazards, it's got to be remedied, right? It's got to be structurally sound, can't be any sanitary issues at all right? Now, one thing that I want you to know about chipping paint, if there's ever chipping paint on a property, VA is always going to call it out, right? Now, you heard me talk about this earlier, but I'll briefly mention it again, and that's simply this, all right? VA appraisals, all right, do not come in lower just because they're VA appraisals. In other words, Jay Josephs, the VA appraiser that I interviewed, he said, Jimmy, I don't care what the VA, what type of financing the veteran's getting, right? At the end of the day, right, all I care about is the comp. So don't let people get away with people telling you that the VA appraisal is somehow a subprime loan or something along that nature. It's like, no, that's not true, all right? Or that the appraisal stinks. It's like, no, that's not true. In fact, the VA is the only one that has this built into their process from the standpoint of there is something called a Tidewater notice. The Tidewater notice is designed to let you know in advance and upfront as to whether or not, right, the property is going to appraise, excuse me, at full value. And if it's not, you have 48 hours to provide additional comparables that support the value of that property. All right. Now, in most, how should I say, states, right, across the nation, VA loans require a PEST inspection. Now, there are some states that don't, but by and large, most states across the country require a PEST inspection. All right. Now, the property can't have any termite report, or excuse me, can't have any termites rather. Or any evidence of termites. If it does, it needs to be treated. Roger that. All right. So I've covered a lot. We've been doing this now for about 50 minutes, but I think by and large, I've given you a lot of information about your VA home loan benefit. I hope you've found it to be of value. And remember, if you have any questions, simply comment down below. My goal is to make this the #1 watched VA loan video on YouTube. And with your help, I believe that we can make that happen. Thanks for watching. If you have any questions, drop a comment down below. Feel free to like the video if you feel like I earned it. Talk to you soon.